I've got another shareholder from BitFinex on the line. This time it's Simon Dixon from Bank to the Future. Simon, welcome back to Crypto Trader. Simon, I've got to ask you a question here. Simon, as a shareholder of BitFinex, did you know that this was all happening while it was happening?
Well, while we didn't know all the details of what was happening, we did know that BitFinex has been plagued with some banking challenges all the way through. You know, this all began when Wells Fargo started to attack BitFinex and the counterparty banks that were servicing the exchange. And then they had to move to other banks, and it's been a knock-on effect until eventually they ended up in a position whereby their funds had to go through a payment processor that many of the exchanges in our industry were actually using at one point. And that payment processor turns out to be Crypto Capital that allegedly has run off with the funds or commingled the funds or pocketed some of the funds.
But Sam, as a shareholder, don't you think that the board was negligent to give a company $850 million?
Well, the $850 million is a huge amount of money, and it is one of the only way that they had of actually servicing some of the demands for withdrawals and fulfilling those obligations. Now, BitFinex did actually get a banking partnership that was able to fulfill those. But you know, it's at the time it's a function of trying to make sure that they could fulfill services for their clients and meet demands for deposits and withdrawals in an environment whereby the banking relationship is not happy to serve such institutions that are outside of the US and servicing the crypto market.
Sam, surely they must have had some kind of risk mitigation process in place that would have protected them. I mean, something as simple as, instead of giving $850 million to one company, make 8 payments of $100 million and make another payment of $50 million.
Sure, you know, these are questions that do need to be answered. But as far as we can tell at the moment, the funds are safeguarded. The reason that this all came to be is because the crypto capital, certain government institutions decided to seize some of those funds. And, you know, it's a question of how much funds do you need in. So many exchanges work off a hot wallet, cold wallet system for their crypto, but it's similar in the banking system where you have a bank account that can service money that doesn't need to be moved, and then a bank account that can service in order to meet the demands. And BitFinex is one of the most highly liquid exchanges for trading between US dollar and Bitcoin. And therefore, I guess their risk mitigation strategy determined that that's how much they needed in the equivalent of their hot wallet in order to service the demands of all of these transactions, Tether, as a result of every single crypto to crypto exchange using BitFinex's banking relationship in order to facilitate their growth. So we have to remember that BitFinex, through Tether, became the banking partner for all of the largest crypto to crypto exchanges. The reason for Binance's astronomical growth was because they didn't have to have a banking relationship, and they relied upon Tether and BitFinex's banking relationship in order to become the largest exchange in the crypto market.
All right, but Sam, did you know that BitFinex had taken a loan from Tether?
All I knew that what was publicly disclosed, and that was at a certain date, they had an update to their terms and conditions stating that it's no longer, you know, backed just by dollars, but it also is backed by other assets. But the loan wasn't actually something that they made the disclosure in their terms and conditions, as opposed to making a public announcement about the backing of that. Because from what I can tell, again, these are all my opinions. I don't have inside information. I only have what's publicly available to shareholders on our platform and the public information. Is that the loan was actually made because they thought at all times Crypto Capital was making them think that the funds were just held up as opposed to disappeared.
Simon, have you seen any evidence that the money is actually with governments and that the money hasn't been squandered or missing?
No, I haven't seen that evidence, and BitFinex has continually asked for that evidence. And as far as I can see from information available, they haven't been provided with that evidence at the moment. And so really it's a question of the authorities doing their work and trying to figure out where these funds are. BitFinex seems confident. they've launched their recovery plan, and they've launched a token that will then be repaid if those funds are then recovered by the authorities because they are the rightful property of Tether.
Sam, so the team is now doing an IEO for $1 billion. Knowing what you know now, are you going to be buying in the IEO?
Personally, not financial advice, no one should follow me, but I've seen a team that is committed to solving problems in extremely challenging situations and making good on investors. Last time we invested in the shares as the hack recovered, and that was outperformed Bitcoin as an investment and was one of the most profitable investments on BnkToTheFuture. So I think it's completely high risk, high return, but it's a bet that I'm willing to make with some of the money that I have available for such speculation.
Sam, $1 billion IEO would make this the biggest IEO by a long way. Do you think that given all this dubious behavior and all these shenanigans and the court case, do you think that BitFinex can raise $1 billion?
Well, EOS already raised $4 billion in the hype of the market, and Telegram did $1.7 million. And BitFinex, I think, is very feasible that they can raise it. And from what I can see, they're pretty close to being there already.
That's Simon Dixon, and he's confident that BitFinex can actually trade out of this.